Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Your diploma does not represent the end of your education, but the beginning of your student loan payments. Now, David, are you going to get out, or am I going to have to bowl round the wicket and kill you? Malcolm Marshall to David Boone. My wife and I were happy for 20 years. Then we met. Rodney Dangerfield. The best thing about the future is that it comes one day at a time. I've seen better batters in a fish and chip shop. Justin Langer.
Japan's bond market has an unusual landlord, the Bank of Japan. Today, the Bank of Japan owns roughly half of all Japanese government bonds, far more than other major central banks. That massive presence keeps bond yields artificially low, even when inflation or economic risks suggest they should be higher. The side effect? Investors look overseas for better returns, selling yen to buy higher yielding assets abroad. That's the one reason that yen has remained under pressure despite Japan finally emerging from years of deflation. A calm bond market may sound reassuring, but sometimes it's calm because the biggest player owns a stadium. India's next export champion may never leave a port. For years, goods exports led the way. But services exports from IT and consulting to financial and business services have been growing even faster. The gap has narrowed dramatically, and India is now on the verge of services exports overtaking goods exports. That's a big milestone. Services need fewer ships, face fewer tariff barriers, and typically generate higher value per employee. It also makes India's export story less dependent on global manufacturing cycles. Foreign investors haven't just been cautious this year, they've been heading for the exit. In 2026 alone, FPIs have pulled out a massive 2.74 lakh crores from Indian equities, making it one of the sharpest equity outflows on record. The silver lining, debt markets have attracted around 61,000 crores in net inflows, helped by India's inclusion in global bond indices and relatively attractive yields. It's a fascinating split. Equity investors are worrying about valuations and global uncertainty, while bond investors are quietly buying India's macro story. Who says old companies can't learn new tricks? BSE is proving that age is just another line item on the balance sheet. Over the last 5 years, the 150-year-old exchange has delivered extraordinary growth, with revenue compounding at 50% annually and net profit at an eye-popping 77% a year. From around 600 crores in revenue in FY21 to nearly 4,800 crores in FY26, the transformation has been remarkable. The secret? A surge in retail participation, booming derivatives trading, and stronger market activity has turned India's oldest stock exchange into one of its fastest growing financial businesses. Office leases just don't fill buildings, they fill neighborhoods. As global companies expand in India, they bring thousands of high-income professionals who want to live close to work. That creates strong demand for premium housing in nearby micro markets. It's no surprise that Bangalore and Bombay have made the world's top 10 housing markets, with prime residential prices rising 9.4% and 8.7% respectively in 2025. In real estate, office towers are often the first domino. Luxury apartments usually follow. India may be the world's largest options market by contracts traded, but that's only half the story. In 2025, India traded 78 billion contracts, more than 3 times the US. Sounds incredible until you look at the money involved. Options premium turnover was just $16 billion in India versus a staggering $18 trillion in the US. That's because Indian contracts are much smaller and involve far less capital at risk. Even participation is often overstated. Industry estimates suggest only 15 to 20 lakh unique traders actively trade options in India, not the massive army headlines sometimes imply.